Reliance Industries Limited, as we all know it, has come a long way, right? From starting out as a textile trading company, today Reliance has transformed into India's largest private sector conglomerate. Now, whether it's energy, petrochemicals, retail, telecommunications, media, or digital services, Reliance has its presence everywhere. Now, talking about the major stakeholders, it's no surprise that the Ambani family is right at the center, with Mukesh Ambani serving as a chairman and managing director. Now, coming to its significance in the Indian economy, Reliance is a big contributor. In the financial year of 24, Reliance contributed rupees 1.86 trillion to the national exchequer through various taxes and duties. And if you look at the past 3 years, their total contribution has crossed rupees 5 trillion. And that's the highest contribution by any Indian corporate entity. On the export front, Reliance accounted for about 8.2% of India's total merchandise exports. And if you look at the stock market, Reliance has a significant weightage of 9.23% on the Nifty 50 index, second only to HDFC Bank. So, as you can see, Reliance plays a huge role in our economy. Moving on, at the 47th Annual General Meeting, which was held on Thursday, August 29th, Reliance announced that its board will meet on September 5th to decide on bonus issue. Now, they're considering a 1:1 bonus issue, but we'll have to wait a bit for the final details. Now, some of you might be wondering what exactly are bonus issues. Well, bonus issues are additional shares given to existing shareholders without any extra cost. It's basically the company's way of distributing its retained earnings, not as dividends, but as free shares. Now, to give you a simple example, imagine a company declares a bonus issue in a 1:1 ratio. Now, a 1:1 bonus issue means that for every one share a shareholder owns, they will receive one additional share. So the total number of shares after the bonus issue will be 2 times the original number of shares. Now, after the bonus issue, the market capitalization of the company remains the same, since no new capital has been introduced, just the number of shares has increased. If the stock price before the issue is rupees 100 with a total share count of 100 shares, after the issue the share count would increase to 200 shares and the stock price would drop to rupees 50. But just to clear any confusion, issuing bonus shares does not actually create wealth for an investor. While the number of shares you hold increases, the market price per share usually adjusts downward. So why do companies do this? You see, when the share price of a company is high, it becomes less affordable for retail investors. Now, issuing bonus shares increases the number of shares and lowers the price per share, making it more affordable for everyone. Plus, more shares in the market means better liquidity, making it easier to buy and sell. But just to clear any confusion, issuing bonus shares does not actually create wealth for an investor. While the number of shares you hold increases, the market price per share usually adjusts downward. Historically, Reliance has issued bonus shares 5 times in the last 4 decades, and the last time was in 2017 with a 1:1 ratio. And the first ever bonus issue was way back in 1980. Now, coming back to the AGM, there were a lot of announcements, but one of the big ones that people were eagerly waiting for was about the IPOs of Jio and Reliance Retail. However, no timeline was shared during the AGM. Now, as for the different segments of Reliance, Jio has ambitious plans to build large-scale AI infrastructure, including developing JioBrain, which will cover the entire AI lifecycle. The management has set a target to double Jio's revenue and EBITDA in the next 3 to 4 years. On the retail side, Reliance Retail plans to leverage deep technology with real-time dashboards and AI to enhance operations. They also aim to double their revenue and EBITDA in the same time frame. When it comes to new energy, Reliance has reiterated its commitment of rupees 75,000 crore, which was first announced in 2021. They're optimistic that the profitability of the segment will match the current oil to chemicals profitability in the next 5 to 7 years, with the EBITDA run rate of rupees 60,000 to 65,000 crore during this period. Now, if you want us to make a more detailed analysis on Reliance Industry and how each of its businesses are performing and around the AGM meeting, do let us know in the comment section. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.